are doing Intact. Intact, and we've got Aislinn, Guadalupe, Colleen, and Anita. How can Intact and other insurance companies work more efficiently with municipal, provincial, and federal governments to accelerate climate adaptation strategies to reduce flooding risks? All right, take it away.
Thank you. Good afternoon, everyone, and thank you for joining us. Before we begin, given our focus on Atlantic Canada today, we would like to extend greetings and thanks to the traditional guardians and stewards of the land and waters in Atlantic Canada on which many work, play, live, and gather. We acknowledge that First Nations, Inuit, Métis are active drivers, leaders, and innovators in approaches to addressing climate change, and we offer gratitude to diverse Indigenous peoples of Turtle Island, whose presence and knowledge historically and continuously mark these territories. May your teachings guide our work in the spirit of reconciliation and undoing ongoing colonial practices. It is with great pleasure that Aislinn, Guadalupe, Colleen, and I, Anita, today are here to present our Policy Lab Challenge. We will begin by presenting the Canadian climate policy context. We will make the economic case for climate adaptation. We will explain the role of insurance. We will explain our guiding principles that we use to draft our policy recommendations. We will then present our 3 programmatic policy recommendations along with our contextual issues. And finally, we will conclude by tying it all together. But first, our Policy Lab Challenge. So Financial Intact Corporation sponsored this Policy Lab, and they asked us, how can Intact and other insurance companies work more efficiently with municipal, provincial, and federal governments to accelerate climate adaptation strategies to reduce flooding risks? And we have decided to focus in on Atlantic Canada. And now I will pass it on to Colleen.
Thank you so much, Anita. So I think you've been hearing a lot about climate change today. I don't need to remind you that Canada's climate is changing quickly and irreversibly at twice the global average speed. And flooding has become the most common and costly peril across the country. Given increased precipitation, coastal erosion, and sea level rise, communities in New Brunswick, Nova Scotia, Newfoundland and Labrador, and Prince Edward Island remain uniquely vulnerable. In response to climate impacts, you've already heard about one type of action, which is mitigation. That refers to the reduction in greenhouse gas emissions. We're going to be talking today about adaptation, which refers to building resilience, reducing risk, and overall reducing the negative impacts of climate change. Since we know that mitigation doesn't fully prevent or reverse changes in the climate, adaptation is a really important complementary measure to mitigation. In terms of the policy context, in Canada, the policy framework for climate adaptation and flood risk management is complex. It cuts across jurisdictions with efforts at the federal, provincial, and municipal levels, as well as requires a horizontal engagement across different sectors, including natural resource management, environmental sciences, emergency management, infrastructure, and much more. At the federal level, responsibilities for adaptation and flood risk management are shared across several departments with leadership from Environment and Climate Change Canada, as well as Public Safety Canada. And it's interesting to note that Public Safety is actually leading an effort to introduce a low-cost national flood insurance program in collaboration with the insurance sector. At the provincial level, each of the 4 provinces in Atlantic Canada has its own unique strategy for climate adaptation and flood risk mitigation. Most of those policies have been introduced within the last 5 years. And looking across the region, some common elements of those policies include awareness raising for residents and businesses about their exposure to flood risk, improving infrastructure resilience and updating standards and regulations, and importantly for our recommendations, an effort to encourage local level governments to develop their own adaptation plans. Municipalities are really at the forefront of climate adaptation, but they're also creatures of the provinces. So they don't have their own specific authorities to address the impacts of climate change. Instead, they're delegated responsibilities by the provinces, and that delegation actually looks a little bit different in each of the 4 provinces within our challenge. We'll talk a little bit more about the unique challenges that municipalities face under our first recommendation. Finally, First Nations band councils and Inuit community governments also play a critical role in climate adaptation in Atlantic Canada. While policies have often pursued consultation with communities, Indigenous peoples have also asserted their own strategies based on Indigenous knowledge systems and governance structures. A great example of this is last year, the Assembly of First Nations released their national climate strategy. And in addition, the federal government, as part of its nation-to-nation relationship with First Nations, Métis, and Inuit peoples, is working to transition resources and authorities to support self-determination in climate adaptation. In terms of the economic case, the increasing frequency and severity of extreme weather and flood events really underscores how vulnerable Atlantic Canadians are to climate change. The cost of recovering from increasing flood events is rising. Flooding alone accounts for $2.9 billion annually in residential damages, and overall costs over the last 15 years exceed all previous years combined. And those costs are borne across all parts of society. For every dollar of losses covered by insurers, governments, homeowners, and businesses incur an additional $3 to $4 in losses. In the face of those rising costs, adaptation is proving to be a prudent investment. Studies suggest that every dollar spent on adaptation can save $13 to $15 in total benefits accrued over the long term, and that's due to preventing damage and also reducing disaster-related expenses. Even when that return on investment is lower, the benefits of acting now far outweigh the costs of recovery later. Quickly on the insurance sector, they play a critical role in society as a risk transfer mechanism, and property and casualty insurance coverage has been found to improve recovery outcomes for individuals, for their communities, and for the economy overall. But the costs of climate change to insurers are on the rise. Claims across Canada hit $3.1 billion last year, the fourth worst year on record, and most of those came from the Atlantic provinces due to extreme flooding events. Given those trends, insurers are under increasing pressure to increase premiums, to exit markets entirely, and to motivate folks to take risk reduction measures. It's important to note that insurance companies remain a leading voice on climate adaptation. They're innovating new products like insurance for natural assets, and they play an important role in educating individuals and their communities on effectively lowering their risk exposure. Before we move on to our programmatic recommendations, we wanted to ground them in 4 guiding principles. The first is that adaptation should be people-centered. We recognize that Atlantic Canadians have their own unique strengths and assets, and that our recommendations should support their agency to choose the adaptive actions that best meet their needs. The second is we believe adaptive action should be equity-focused. We know that climate change and increased flooding have differential impacts on Atlantic Canadian populations, and so equity-deserving groups should be prioritized, and importantly, our adaptive action should neither cause harm nor deepen inequities for those communities. Thirdly, we believe strongly that climate adaptation requires a whole-of-society approach. Our recommendations seek to leverage the unique capacities of the insurance sector as well as other stakeholders, and to promote coordination and collaboration at all levels. And finally, adaptation requires an adaptive management approach. Since the climate is changing so quickly and our understanding of its impacts is constantly evolving, we've recommended programs that can be agile and learning-oriented. And with that, I'll pass it to my colleague Guadalupe, who will talk about our first recommendation.
Thank you, Colleen. So as Colleen has mentioned, local governments in Atlantic Canada truly are at the forefront of climate adaptation. And for this reason, we've decided to focus our first recommendation on them. Local governments face enormous pressure to keep up with the demands of climate adaptation. However, resource constraints are frequently identified as the #1 barrier to climate adaptation at the local level. Communities are faced with difficult choices regarding where to dedicate limited resources and are looking for solutions that reduce costs, risks, and liabilities in the short and the long term. We considered 4 key issues that we think are really standing in the way of swift climate adaptation on the part of local government. So our first issue is that local governments are making slow progress on climate adaptation. By their own assessment, many local governments remain woefully unprepared to address flood risks and protect their communities. With most Atlantic Canadians living in areas vulnerable to flooding, the progress on adaptive action is simply insufficient to meet the growing risk throughout the region. Issue number 2. With financial constraints, local governments are forced to make difficult trade-offs. the demand on local governments to maintain infrastructure and take adaptive action is only increasing, but their opportunities to raise direct revenues are limited to property taxes. And this leaves communities in very difficult dilemmas where they have to make a choice between restricting land use in favor of flood risk mitigation or increasing or development in order to raise revenues. Issue number 3, local governments lack the necessary human resource and technical capacity. And without these resources and without this capacity, local governments struggle to implement large-scale adaptive action. This is especially true for rural communities where 46% of Atlantic Canadians still live and where resources are even more finite. Issue number 4. Without action, local governments face growing legal and financial risks. Flood-prone communities with inadequate protections are less attractive for businesses, and high flood risk vulnerability may limit financing options for local governments. More severe events mean greater losses and higher claims, and this puts greater pressure on insurance companies to raise premiums for public entities. In cases of flooding where there is perceived negligence, a growing number of cases are being brought against local governments by residents and local businesses. So to address these issues, we recommend that insurers take up the pilot Flood Leadership Organization and Operational Defense Program, otherwise known as the Flood Program. This incentive program would offer annual premium deductions of up to 20% on a credit-based system to participating local governments who take community-level adaptive actions to mitigate flood risks. These short-term cost savings, alongside this program, aim to build adaptive capacity, increase financial support, and accelerate adaptive action at the community level. Aligned with the principle of adaptive management, we recommend that this pilot program be implemented for 6.5 years, including the planning phase. Eligibility for this pilot program would be limited to municipalities, First Nations band councils, and Inuit community governments who carry insurance, including overland flood insurance, and have an established climate adaptation plan that includes flood risk mitigation resources. Aligned with the equity focus guiding principle, we recommend that insurers consider a community's socioeconomic vulnerability when selecting pilot participants and prioritize those with both high risk exposure and high vulnerability. Aligned with the people-centered principle, the suite of proposed activities allows participating communities to choose the adaptive actions that are best aligned with their existing plans and with their specific context. These could include, but would not be limited to, awareness raising and education efforts, flood hazard mapping and dissemination, regulation, including enactment and revision of building codes and land use restrictions, damage reduction, including infrastructure improvement, building retrofits, and stormwater system maintenance, and emergency preparedness. In addition to the credit-based system for adaptive actions, the program includes 2 more components. Given the challenges faced by most local governments, insurers would provide additional capacity building support through 3 distinct streams: in-house risk management consulting services, funded access to climate adaptation specific expertise and training, and a resource bank of recognized adaptation tools to guide the adaptation process. Our final program component addresses additional funding for local level initiatives. For insurers with charitable arms, we recommend allocating grant-based funding to participating communities taking on flood risk mitigation actions. Several examples of this activity already exist. Now on to benefits and limitations. While this program has many community-based benefits, the most important are enhanced public safety, reduced flood damages, cost avoidance, environmental protection, and improved social outcomes through adaptive action. For insurers who know firsthand the enormous costs and risks associated with a changing climate, leading the way on climate adaptation is both a sound business decision and a socially responsible one. The limitations of this program are related to the eligibility criteria, which would exclude communities that are unable to access overland flood insurance and that do not have an existing adaptation plan. Consequently, some communities in extreme high flood risk areas, including some Indigenous communities, would be excluded. Turning to the advocacy component of our program, despite these cost-saving incentives, many local governments face persistent financial barriers to adaptive action. Insurance companies should advocate for the establishment, continuation, or expansion of funding for local-level climate adaptation initiatives. Insurance companies are well placed to discuss the business case and advocate for increasing funding with federal and provincial officials, civil society organizations, and other members of the private sector. Now, in terms of our costs, currently we've estimated $13 million for the duration of the pilot, and the two largest line items are related to premium deductions available to each of the participating communities and the cost of the grant program. And with that, I'll turn the mic to my colleague Anita, who will walk us through recommendation number 2.
Thank you, Guadalupe. So our second recommendation is centered around property owners. So throughout our research, we have identified the following 4 issues. The first one is the lack of flood insurance uptake and action on adaptive measures. So in 2015, Canadian insurers launched the optional residential flood insurance. And, uptake of that insurance grew steadily. However, the majority of these insured properties represent only 5 to 10% of the anticipated residential flood damage. In addition to this gap, encouraging property owners to implement adaptation measures to lower their risk has proven to be a lot more challenging than anticipated, and therefore behavioral changes are definitely required. The second issue is that many Atlantic Canadians are unaware of essential information regarding flood risk mitigation. Research suggests that Canadians generally are unaware of their role or their responsibilities in flood protection and do not actively seek out any publicly available information on the topic. Even with raised awareness, misperceptions of their own risk is very frequent. The third issue is the financial costs are often cited as one of the most significant barriers to insurance uptake. Across Canada, home insurance premiums increased by 20 to 25% between 2015 and 2019, with more than half of this increase due to flood damage-related claims. While adaptive measures can range in price from economical to very expensive, for some property owners, the cost of even some of the most affordable measures may be too prohibitive. And the last issue, Canada's history of colonization and systemic discrimination has led to profound inequities, placing certain populations at greater risk when it comes to impacts of climate change and climate policy. Black, Indigenous, people of color, 2SL, LGBTQ+ people, people with disabilities, lower income people, and the elderly are disproportionately represented in high flood risk areas in Canada. And Atlantic Canada's rural and remote coastal communities have the most elderly population across the nation, and their annual income is below the national average. So these socioeconomic barriers make insurance even more unaffordable for these groups in these areas. So considering these issues, we recommend that insurance company implement the Resilient Rates program. So aligned with research and with the people-centered principle, the Resilient Rates program aimed to address some of the key behavioral challenges through an incentive-based model. The program would operate by offering credits, resulting in deductions on flood insurance premiums for property owners who implement eligible adaptation measures to reduce flooding risk. So credits will be applied to each measure based on expert determination of their level of effectiveness. These credits will then be applied towards a reduction in total insurance premium with a maximum deduction rate of 20%. It's recommended that the insurer create a guideline to attribute specific number of years to each measure so that they can be considered for the annual premium deduction. In our brief, we actually recommended 23 eligible measures. They aren't all provided here, but we provided some examples, for instance, to seal foundation cracks or backwater valves. Please note that also in our recommendations, we recommended measures that include a range of costs for installation. This program is also divided into two streams. So the first stream is what we call the verification process stream. So under this stream, property owners independently undertake measures that are found on the eligible list. And to ensure validity of these actions, a verification process would be implemented by an insurance company. So in cases where work is done by a certified contractor, property owners would provide documentation from the contractor confirming completion of these measures. In cases where the property owners wish to keep costs down and do the work themselves, they would provide photographs or any types of receipts as proof of completion of the work. Upon verification, the insurer would then apply the appropriate premium deduction on their flood insurance. The second stream is what we call the certification stream. So under this stream, it involves property owners hiring a certified third party to assess the property and recommend strategies. Once the property owner has implemented the recommended strategies, they would provide the evaluation along with the list of completed measures to the insurer. Given that the insurer has a professional evaluation of the property, including the implemented measures, in addition to applying a premium, they would actually provide the property owner with a resiliency rate certificate. And so this certificate would remain on file with the property, thereby ensuring that applicable reductions to premiums would be available to all future owners of this home. Now on to benefits. So the resiliency rates is designed to support adaptive actions, and one of the benefits, of course, is increased insurance uptake for property owners from moderate to high risk areas. By implementing these measures, owners can benefit premium deductions and potentially increased property value. And so while insurance can also reduce risk exposure and claim payouts. In terms of limitations, the program is limited to areas with available overland insurance coverage, excluding many properties on First Nations reserve due to complex ownership arrangements and prohibitive flood insurance costs. Additionally, cost savings for participants will vary depending on individuals' insurance policies, the flood risk exposure that they have, adaptation capabilities, and of course the availability of government grants or loans. That ties in very well with our advocacy component. So the most effective way to accelerate climate adaptation on the property level is actually to have a concerted effort. So to this end, we recommend that an insurance company can contribute to a whole of society approach by advocating for the highest level of coordination between all levels of government around rebate and grant programs to be available to property owners to strengthen adaptive action and overall climate resilience. And that could be very similarly structured to the oil to heat pump affordability program that is now available. And finally, in terms of cost, currently we have estimated that this program will cost about $1.68 million for implementation and about $276,000 yearly. However, this is with a big caveat that the cost estimate does not include the cost of premium deductions due to the proprietary nature of insurance rates, which are not publicly available to us. And with that, I will pass it on to Aislinn.
Thank you, Anita. The complexity of flood adaptation in Canada is compounded by coordination and awareness challenges. One of the central challenges in flood risk management is the pervasive lack of public awareness about flood risks and preventative measures. As previously mentioned by Anita, many Canadians are unaware of their flood risks. They often don't report flooding to municipalities, participate in community consultations, take advantage of government programs, or have adequate flood insurance. If people are unaware of their risks, they cannot make informed decisions. As such, increased awareness can lead to better preparedness. There's also a notable absence of publicly accessible and consistent flood maps in Canada. Our research suggests that existing maps are often outdated, inconsistent, or too technical, thus limiting their usefulness. Many current maps are hazards-based and not publicly accessible, leading to an underestimation of flood risk by property owners. Insurance companies specifically often rely on proprietary maps, which are also not publicly available and may conflict with official maps, adding to the fragmentation problem present within Canada. Ultimately, this is problematic as flood maps are considered as an essential tool for identifying flood probabilities and impacts, which are critical for risk mitigation and resilience building. Finally, there's a significant inconsistency and inaccessibility of information related to flood risks and adaptation measures. Resources and critical data are often scattered across multiple platforms or controlled by different actors, making it difficult to access comprehensive information. This lack of coordination among diverse stakeholders and with varying priorities often leads to misaligned objectives and duplicated efforts. As such, increased collaboration and elimination of siloed efforts is necessary to develop comprehensive flood resilience strategies. These identified issues bring us to our third and final recommendation, Flood Aware, a pilot program established by the insurance sector aimed at enhancing flood risk and adaptation awareness among property owners and residents. Through enhancing information flow and proactive engagement, Flood Aware aims to build a people-centered foundation to mitigate flood impacts through two programmatic streams. Stream 1 focuses on enhancing community engagement and fostering collaboration through enhancing private sector and local business collaboration with insurance companies, real estate agents, financial institutions, and other stakeholders to create a network to disseminate consistent, accurate, and actionable flood information. This stream also works to inform property transactions with the support of banks, mortgage lenders, and real estate agents to relay information to client bases about property risks, which will aid in embedding resilience thinking into local business practices as well as community planning. Stream 2 emphasizes the benefits of flood insurance and adaptation measures through direct outreach by insurance companies, using mailing campaigns, seminars, webinars, and billing statements to highlight flood insurance benefits and proactive measures, as well as through tailored advice provided by means of personalized consultations offered by the insurance sector on property-specific flood risk and adaptation strategies. This stream will use existing resources like climate-ready infographics and reports to ensure cost-effective yet impactful communication. Now, to strengthen this recommendation, we believe the insurance sector should also play an advocacy role. More specifically, insurance companies should partner with all levels of government to improve public access to flood information. We believe the sector should advocate for enhanced public-private collaboration to leverage resources and expertise within the field. Aligned with the whole of society principle, we believe that improved coordination between all stakeholders invested in and interested in flood adaptation will aid in creating more resilient communities. That leads us to the benefits of the program. FloodAware provides several significant benefits that collectively aim to enhance flood risk awareness and proactive mitigation strategies across communities. Primarily, FloodAware poses an opportunity for increased flood insurance uptake. Email campaigns, educational seminars, and tailored advice can boost flood knowledge among existing customers. And our research suggests that knowledge of extreme risk of flood damage significantly increases the willingness of homeowners to purchase property flood insurance. By boosting flood risk awareness, FloodAware also has the potential to increase uptake of adaptive measures among property owners, thereby reducing the risk for both them and their communities. Next, the limitations. Now, despite its robust framework, the program faces several challenges and limitations that could potentially impact the effectiveness and full realization of the program's objectives. One primary challenge with the program is measuring its impact. The long-term nature of flood risk management makes it challenging to measure immediate successes and the impact of education and awareness initiatives. Another issue is related to information fatigue. While the program aims to leverage existing resources and establish content, there remains an inherent risk that residents become overwhelmed by flood-related information, which may potentially diminish the impact and reach of dissemination efforts. Finally, FloodAware success relies on the active and sustained participation of a diverse range of stakeholders, including varying levels of government, community, private entities such as financial institutions and real estate agents, and Indigenous actors. This presents as a limitation, as coordinating these entities and ensuring their continued engagement may present significant logistical and administrative barriers. By acknowledging these challenges and limitations, we believe that FloodAware can be better positioned to achieve its goals. Now, closing with the costs. The anticipated costs of this program are estimated around $446,000 for year one, with total ongoing costs projected around $396,000. These costs include staffing, professional services contracts, as well as material costs. Now, tying it all together, effective climate adaptation requires individuals and communities to have access to accurate and reliable flood risk information. However, knowledge alone is insufficient. Individuals face risk misperceptions, financial barriers, and limited capacity for adaptive measures. As such, an integrated approach is crucial for effective climate adaptation. Together, these recommendations provide a holistic approach, ensuring that increased knowledge and awareness drive meaningful action and enhance overall community resilience. Now, should these recommendations be accepted, we believe that the next step for insurers would be private sector engagement, enabled through partnerships with industry actors and relevant private actors. The goal of these engagements should be to consolidate industry support and foster a unified approach to implementing flood adaptation measures and enhancing flood resilience. We also recommend initiating collaborative discussions with government partners at all levels to validate and align these programs with existing policies. This engagement will also potentially help secure the political and financial backing needed to provide more comprehensive solutions. While prioritizing private sector and government engagement, a concentrated effort from all stakeholders is essential to transform these recommendations into effective climate actions. We believe supporting and scaling these pilot programs thoughtfully will ensure they adapt to the evolving conditions and continue to serve individuals and communities. Without doubt, successfully implementing these programs will advance regional resilience and set a precedent for integrative and effective flood risk management nationwide. Thank you.
Thank you, team. Well done. Okay, judges, over to you. Who's first?
I think I'm first. Well done. That was terrific.
Any chance you're on the board of Intact?
No, I was going to say, full confession, I have absolutely no background and nothing to do with anything that you have talked about. So, you know, I'm tempted. You haven't talked about other jurisdictions, so I'd be tempted at some point to know what you've done in terms of analyzing what other jurisdictions are do, but that's not my question. When you talked about advocacy to other stakeholders, was there any discussion about engagement with other stakeholders? So you mentioned mortgage lenders. It would seem to me that mortgage lenders would be often in a very similar place of interest. And were there any discussions about actually engaging with banks and other mortgage lenders to collaborate with some of these incentives?
Excellent question. Thank you. Yes, part of the Flood Aware program is that we want to ensure that insurance companies are engaging with banks, with real estate agents, with anyone who's really on the ground in order to provide the appropriate information and mortgage lenders at a time at a transaction. So we do believe that that's part of the Flood Aware program itself.
Usually on issues like flood engagement or fire insurance, or let me stick with floods for a second. So usually the first idea is to do flood mapping and then to get the municipal and provincial governments to not allow building in those areas, etc. And we know how well that works and doesn't work, but I'm surprised that that's not part of the presentation. Could you talk a bit about why that's not in this package?
That's a great question. I think our prompt was to really consider what the insurance sector can do uniquely to contribute to accelerating climate adaptation. The first thing we did was explore what other stakeholders are doing, including the government. We recognized that there are a lot of ongoing efforts to improve the availability of flood maps. For example, the Federal Flood Hazard Identification and Mapping Program is in the process of conducting comprehensive mapping that will be made available through the provincial government level. So we wanted to make sure that whatever we were proposing wasn't duplicating existing efforts, but was instead complementing them.
Yeah, that was a great presentation. I had one question, which is sort of wondered, as you're talking about municipal governments, if one of the sort of central problems in this area is this sort of misalignment of incentives, in the sense that if a municipal government invests in flood control measures, it bears the cost of that. But then if a big flood happens, then the provincial government or the federal government comes in with disaster relief, and so in a sense some of the benefits of the mitigation measures are actually not being reflected in reduced cost by the municipal government. So there's kind of a question of who's paying across the different levels of government. And I guess wondering, well, first of all, is that a problem? Do you think that is a problem as you've been studying this issue? And then secondly, is there anything that Intact could be doing to kind of bridge that and you know, help to align things better?
Thank you. Very thoughtful question, and something that we really came upon time and time again in our research was just how much of the brunt is really on municipalities. We expanded the term to local governments because we wanted to be inclusive of other forms of government. But much of the research really focuses on municipalities when it comes to this. I think we all have strong opinions about how unfair that is. And yet it wasn't the scope of our research, you know, or of our question. What, again, going back to what Colleen said, we were hoping that we could provide solutions to what is really a whole of society problem focused on what insurance companies can do. At the same time, recognizing that insurance companies are an incredibly powerful lobby, and they already have the ear of government on a lot of the things that you mentioned. So some of that work is already happening, and there is an imbalance. You're absolutely right. And there's no way that municipalities can confront what is coming, because what we've seen is not the worst of it, as we all know.
So I'm going to piggyback off that just a little bit. Throughout your presentation, you talk about government collaboration for financial backing, advocacy for funding from governments, and just political will to make this an urgent priority. And going through your briefing note, you talked a lot about federal policy in the climate adaptation space. In the work that I do, a lot of clients I work with are very worried about what happens should the federal Liberals lose the next election. The Conservative government comes into power. Say they remove some of these economic incentives for climate adaptation, remove some of the direct funding for climate adaptation. How would you kind of navigate that, or kind of pivot your recommendations to accommodate that? Or what would be your pitch to a new Conservative government to kind of keep that stuff in place, and because you think it's necessary?
Yeah. Chris Reagan, market failure. That's my 2 words. We feel very much that, well, first of all, there are indications that there are vast areas in Canada where the insurance sector has already left the market or will leave the market. There are 1.5 million homes that are already unprotected, unable to secure insurance. And so what I would say to a Conservative government coming in is, don't do that, because you'll pay for it on the back end. Because if we don't continue to incentivize these changes, the private sector will continue to leave areas of Canada that they consider too risky.
Okay. So I'm opening it up to faculty, to non-faculty, to anybody. We've got lots of time. Anybody want to talk about market failures? I have a question about market failures, but no, is there? Oh, yes, okay.
And I don't know if this is a fair question, so like within the scope of what you were given. Recommendation 2 seems to rely on people having the financial ability to make what are very expensive changes in some cases to their homes. You're using a people-centered approach. And it seems to me that in that recommendation, people may get left behind, particularly those very vulnerable populations that you were speaking about, Anita. So can you talk about that a little bit? Maybe that's not the role of insurance.
This is actually a great question, and we've given a lot of thought to this particularly. Anita had only mentioned a few of the available options, but in terms of climate adaptation, some of these measures can range from $50 to a few thousand. And the goal of this program in particular was to ensure that we are allowing an open door to ensure that people who have lower economic means still have access to an option for a deduction. So even though these measures range in cost, they don't necessarily range in terms of the percentage that is applied and determined by the insurance sector. So obviously that's a determination made by the insurance company themselves. However, there could be $50 incentive measures that you could implement that may be just as effective as ones that are a few $1,000s, depending on what your home looks like, obviously. But the idea was that we were creating a more equitable solution that ensured that some of those cost barriers are alleviated while still recognizing that there is an immense advocacy piece here towards the federal government to ensure that some of those bridges are gapped and that we are providing a more equitable and accessible solution. Obviously, it's not perfect. However, we are hoping that with this range of measures that there are going to be a wider range of people who are able to opt into this program.
Okay, the next question is from Elsie, but we have lots of time, so if the judges want another kick at the can, I invite you to come up with a second question. But Elsie now.
Terrific presentation. Great job, guys. This is really great. In your context, you made the really important point that because this situation is changing so quickly and we're learning so much about it as it happens and as it gets worse, that it's important for interventions to have components of learning. Can we hear more about like what exactly that would look like in practice? Like, are there any good practices currently in place that insurance companies are already doing or that the government is doing? Or if there aren't great practices in place, what in your mind would be the best way to operationalize that built-in learning?
So part of the reason that we proposed pilot programs was because we wanted to make sure that some of these programs are tested and validated as being effective before being scaled to other regions in the country or even at a national level. I think in line with our adaptive management approach, if we were talking about ongoing data collection, obviously we know that insurance companies have elite data collection capabilities, but we envision something more like a developmental evaluation approach where they would be collecting data on an ongoing basis and doing constant and continuous learning throughout the pilot. You'll notice in our timeline, specifically for the public entities program, that we had planned for a 6-month period at the end to gather learnings and reflections from participants so that those could inform future scaling.
Next question from Rebecca.
Great work. I loved particularly the clarity of scoping that you did. And I know it started out as a huge question and you've really crystallized it. One thing that brought to mind for me was the collaboration between insurance companies and local governments. There are many local governments, and I'm curious about the capacity of insurance companies to build relationships with each of those individuals, parties.
Yeah, it's a very good question, and it's a pressing, challenge for considering, as you say, the number of municipalities. One of the things that we have seen in some of the grant-based programs that insurance companies like Intact do is that when a community is fairly small, they propose partnerships between other communities, like nearby communities, so that is a way to concentrate some of these resources. And especially when it comes to solutions that involve nature-based solutions and green infrastructure, for example, because watersheds are shared. Watersheds don't behave according to the lines that we've drawn on a map. So those are examples where insurance companies can be more effective in terms of how they engage with local government. And again, I would probably say this is a whole of society. This is not intended to resolve the issue for every local government. I know that in some of the data that we saw, for example, of the 3,900, if I'm not mistaken, 3,900 municipalities across Canada, 40% have adaptation plans and 20% have implemented some aspect of that plan. People are devastatingly behind on this issue. And so the insurance sector won't be able to resolve it all, but we really do believe they can make a significant difference.
Brenda.
Thanks. Insurance companies have good working relationships with certain parts of government, but not so close in others. And so I'm thinking about potential other allies who are not kind of financially oriented. And it occurs to me that people who work in emergency management would see a lot of this happening frontline. So organizations like the United Way, the Canadian Red Cross, as well as kind of others who work in emergency management, like the Solicitor General or those kinds of. So have you had an opportunity to talk to any of those people about things that they might like to see incorporated into your material?
We have not. However, I myself work in emergency management. So that is that is my background. And I think that that was a careful consideration throughout the entirety of this process, ensuring that we are reflecting potentially some of these on-the-ground realities and understanding the complexity of this issue. We recognize that there are multiple actors within this space, and that, again, going back to this guiding principle of whole society, that we are really going to need all hands in to ensure that we are adapting quickly and effectively. However, I think that should this program continue to scale nationwide, that there should be potentially an opportunity to click in with some of these other organizations to ensure that scaling happens in a really appropriate and thoughtful way, and that communities are feeling like they are being integrated in a good way. But yes, most definitely a consideration, and I think that potentially a forward consideration for the insurance sector as a whole, should they continue to scale this pilot project.
Okay, next question from Nina.
Thank you so much for the presentation, especially the names for the programs are amazing. Very catchy, incredible. But I was curious, considering Canada's very unique landscape, I was wondering if you guys looked into any specific case studies that gave you some more information to craft the recommendations.
Thank you, Nina, for that question. So we did, and actually to Martha's earlier point, we did do a little bit of a comparative analysis when it comes to also not just Canada, but elsewhere. We were quite inspired by California, since they have a lot of, yes, they have a lot of public insurance partnerships when it comes to these things. Also the EU had a lot of incentive programs. However, we couldn't fully, there was nothing fully the same and alike to what we created, given federalism in Canada. I think that gave it a particular twist. And we are very inspired by a program called Hoschenpassen, which was a German program, and it was their certificate program with insurance and the public sector. Thank you.
Okay, Tim Lane. Next.
Looking at the resilient rates program that you put forward, I mean, most of the things that you talk about there seem to be very much very similar to what insurance companies already do. I mean, if you get life insurance, you get a lower rate if you don't smoke. You get lower rates if you, if you have a burglar alarm in your house or whatever. I mean, but so I was wondering whether, in sort of thinking about this, about having rates that are breaks on rates for these flood mitigation measures. I mean, if you've kind of thought or examined why these things are not already being offered, because they seem very much the kind of thing that insurance companies, they don't need the government to tell them to do this or even to give them permission. They could always, I mean, Intact could put these clauses in its policies tomorrow if it wanted to. So why, in your view, is this not already happening?
Okay, well, it's not that it isn't already happening. There are elements of it, as you say. So, for example, if you have a smoke alarm in your house, you get a deduction for it. I think the reality is catching up with us all, politically, for the private sector, for us as individuals, and that we do believe that there is a strong business case for it. When we looked at the data around the losses that insurance companies are facing right now and the scale at which they are growing, the measures that we're talking about incentivize action that we've seen in other jurisdictions, California, for example, where a premium deduction of 15% precipitated a reduction in losses, or claims of 18%. So there is evidence out there that incentivizing consumers to take action pays off in the long run, for the insurance sector, not just for the well-being of society, which we prioritize even more. But we're very eager to make our case to the insurance sector. So.
Martha is next.
Kudos to doing this so succinctly that you've allowed us to, more time for questions. This is great. Just a comment, there have been, just in the last little while, a bunch of fires in homes that have not been insured. And governments are really worried about, who's going to pay for this. And so I do think government has an incentive, recognizing your earlier point. There are lots of places where the private sector is vacated. This one's going to be a harder question, though. Don't take this personally, but insurance companies post-flooding, fire, emergencies have not developed a great reputation. I have not one, but two. Fort Mac will fight back t-shirts. There are people still, there's a piece in the paper the other day, Lytton. People are still 3 years. People still don't have houses. Sometimes that's insurance, sometimes it's not. Is there a part of this, it's not necessarily in your thing, but as you're talking to Intact and other insurance companies, the opportunities for insurance companies to contribute up front to to adaptation, clearing corridors to prevent forest fire jumping, for example. It would seem to me that part of the challenge of an insurance company getting uptake on somewhat reduced rates can be overshadowed in terms of lack of trust for, yeah, great, but where are you going to be, if something actually happens? So I'm just wondering if that's part of the conversation.
Sure. Okay. So there's a really interesting insurance product out there that is still very innovative, and it's not being seen so much in Canada, although certain insurance companies are starting to push for it. It's called parametric insurance. So the difference is the kind of classic insurance that we're all more familiar with is indemnity-based, and so it covers the loss, or should cover the loss. Parametric insurance is actually based on certain measurements, certain metrics that an event is extreme enough that damages may occur, and it provides an influx of capital to communities in order to address those damages. And so a lot of the loss of trust that you're referring to is really based on the struggle that people have in getting the money out of insurance companies, right? In proving the argument. Whereas with parametric insurance, there is no argument. You get, so you get less money than you would through indemnity, but you get an immediate influx, no questions asked. And the reason why insurance companies are starting to explore this is because they see that unprotected communities represent such an enormous loss for the economy. Never mind, even for insurance companies that aren't directly in a market, the loss to the economy as a whole has repercussions for everyone. And so very, very reputable companies like Swiss Re are actively working with this kind of parametric insurance, and we're hopeful that it'll arrive to Canada any day now.
Okay, we're down to the final few minutes, and I'm seeing no hands, so I will ask a question about market failures. So, this is about insurance, and insurance markets are chock-a-block full of market failures. So both of your recommendations are aimed at encouraging the take-up of flood insurance, okay? Which then begs the question, why don't people buy flood insurance? And I think one reason why people may not buy flood insurance is that why they may not pay money for private flood insurance is the moral hazard that is already there where they behave as if they are in fact already perfectly insured by their friendly federal government or provincial government or municipal government. And so why should I pay money to Intact or anybody else if I know, or I almost know, that my friendly government is going to ride in on a white horse after a flood and they're going to fix me up, or they're going to fix me up mostly. So did you think about that? I'm pretty sure you did. So what's your answer to that? And would one possible response to that problem be a Barack Obama style individual mandate, where you simply say, if you're going to build on a recognized floodplain, you must have insurance, period. But that requires a credible commitment by a government to not ride in on a white horse, which is a very difficult, credible commitment to give. So, did you get the question in there?
Yes, we got it, yeah.
Thank you.
Market failures came up uncomfortably often in our policy lab. Certainly moral hazard.
Brace that opportunity.
We enjoyed every minute of it. Asymmetric information, moral hazard came up often. We also talked about this a lot with stakeholders who specifically were concerned about what you just spoken about, that disaster relief or even the National Flood Insurance Program provides a perverse kind of incentive to not take up private insurance at the homeowner level. I think in a lot of our conversations, we've talked about repeated flood events and the physical and psychosocial impacts that that has on communities in Atlantic Canada. And that often the current policies only allow you to build back to your original structure and not to build in important flood resilience measures that would actually improve your resiliency the next time a flood occurs, which it will. And so part of the reason that our programs involve incentives for further flood mitigation measures is to make sure that in the next event and the next event and the event thereafter, it's less and less costly to recover that property.
Okay. Anybody else? Any question, comment? All right, folks. That is a wrap for today. Thank you, team. Okay, we will be back tomorrow at 9:30 a.m. sharp for CMHC. So well done, all teams today. Great jobs. Thank you for the judges. Thank you, everybody, for your enthusiastic participation. And we'll see you all again tomorrow morning.